Hello folks, you're welcome back. This is the weekend commentary for the dollar and foreign currency. So we're going to start by going through the economic calendar on forexfactory.com. We're going to be paying attention to the high and medium impact news events unfolding throughout the week. So we will go through the economic calendar. Just go to forexfactory.com and click on calendar. Then you should take note of the red boxes and orange boxes, because the red boxes simply signify a high impact news event that's going to unfold in the marketplace. The orange boxes is signifying a medium impact, while the yellow boxes simply means there is low impact expected on the news and the time that news is going to be released into the marketplace. So we are paying attention to the date, the day, the time, and the type of asset that news impact is going to affect. Okay, but most importantly, we are more interested in seeing high and medium impact news events. And in a day where you have zero high impact news events and medium impact news events, that simply tells you that there's going to be a low volatility price delivery in that trading day. So let's take, for example, 9th of October 2023, which is on Monday. You can see that we have almost no impact on this day. There is no red box, there is no orange box. This simply means that there's going to be a low impact on Monday 2023. And also you can see that there's a bank holiday on the United States dollar and the Canadian dollar. There's also a bank holiday on the Japanese yen. All right, so the yen associated pair, the dollar associated pair, the Canadian dollar associated pairs are going to experience some level of low volatility or zero volatility in the marketplace. The market will most likely consolidate all throughout the day. Then you go through the rest of the days and take note of the high and medium. You can see on Tuesday we have a medium impact. On Tuesday, Wednesday, we have high impact CPPI coming up, right, on the dollar around 1:30 p.m. So take note of all dollar associated pair around these times. And there is an FOMC meeting minute going to be released also on Tuesday by 7 p.m. So most likely this is when price will most likely form the high or low of the week. All right, when you put this in confluence with the weekly market profile, where you expect to see an asset forms the high or low of its week between Monday to Wednesday, most likely, right? Most of the times it will form between Monday and Tuesday, but it can extend into Wednesday and even Thursday sometimes. So we use the high and medium impact news event and the time that this news is going to be released to pay attention to what price action is doing. Okay, so just go through and take note of all the important news events, because at these times you are going to see a high volatility injected in the marketplace. Then we go back to the dollar index, because the dollar is the benchmark asset for all dollar associated pair. Therefore, we are interested in analyzing the dollar and knowing what's the institutional order flow on the dollar index and implement the opposite on the foreign currency, because the dollar has an opposite correlation with foreign currencies. If the dollar is bullish, foreign currencies should be bearish. If the dollar is bearish, foreign currencies should be bullish. Okay, then in determining institutional order flow, I always emphasize that we need to know the institutional order flow of the higher time frames, the monthly, the weekly, and the daily time frame, because that's where the institutions will position themselves. That's where the institutions will position their trades. Okay, and the higher time frames are where the main driver of liquidity is residing. That's where the drawn liquidity most of the times is residing. It's residing on the higher time frames, the monthly, the weekly, the daily time frames. So this has been our current dealing range. Okay, this has been our current dealing range. We see price has created a new expansion higher, all right, traded into a bearish mitigation block around that level. Okay, now price has retraced into 50% of that entire range. All right, and has traded specifically into a bullish breaker and a buy side imbalance, sell side inefficiency right here. Okay, currently we see that the dollar, once consolidated accumulated contracts, the manipulated retail, we're taking out sell-side liquidity pool residing below that immediate term accumulation or consolidation here. All right, then we see the dollar piercing through the highs of the previous months, okay, thereby creating a new bullish institutional order flow on the monthly time frame. And we did outline the drawn liquidity to be these levels. We mentioned that the sell side imbalance, the buy side inefficiency here. All right, you can see the fair value gap here, and we mentioned that 50% of that fair value gap is called consequent encroachment, and we're still hoping that the dollar is going to trade into that level. And there is also a bearish order block right here that is confluencing with a volume imbalance right here. So all of these are confluences, okay. However, if the order flow has resumed bullish for the long term, then we'll be looking at the relative equal highs here as the draw on liquidity, okay. However, the current order flow is bullish on the dollar index, okay. So this is our bias on the dollar. You can see price has traded into that fair value gap, and it has created a bullish order block here and also a breaker block. What is that breaker block? Simply put, look at this. Price took out the relative equal lows here. That means price formed a lower low before it gave us a shift of market structure higher right here. So that is a bullish breaker. Therefore, we'll be looking to see the dollar trade into this bullish breaker, retest that bullish breaker before it goes to rebalance this inefficiency that we see here. All right, so let's go down to the weekly time frame. On the weekly time frame as well, you can see the dollar traded above the low resistance liquidity residing above all of these highs. The first, the second, the third high. Price took out all of the liquidity residing above that level. All right, right now the previous week ended as a rejection candle. We would like to see this new week open, possibly trade into 50% of this candle wick and then go down into that monthly bullish breaker. You can see that around the monthly bullish breaker is also a weekly fair value gap right here. You can see that is a weekly fair value gap residing right at that level. The weekly fair value gap right there, okay. So this is of interest to me. That level is of interest, so we like to see the dollar reprice back into that level, okay, because for every expansion we expect to see a retracement into internal range liquidity, and as you can see, the fair value here is that internal range liquidity. Then we go down to the daily time frame, and on the daily time frame we are paying attention to market structure. We like to see price forms higher high or higher lows in a bullish order flow, and price forms lower lows and lower highs in a bearish order flow of the higher time frame. So looking at the daily time frame, we can see that price took out the liquidity residing the relative equal high right there. That's the buy side liquidity pool here. Price took it out. Price traded above the buy side liquidity pool residing above that old high right here. All right, and also traded into a bearish order block. You can see the last buy candle here that was traded through by two consecutive sell candles, and it has also a volume imbalance attached to it. Look at how price traded into that volume imbalance, and then look at the current price action. Price has been forming higher highs, higher lows. It took out the previous high and it formed a swing high, three candle price action where the middle candle has the highest high. All right, and it started to pierce to the downside. Look at what happened. Price formed a swing high that had a fair value gap right there. Okay, that also is a bearish order block with a fair value gap. And remember, another block that has a fair value gap is the most valid order block. Okay, if you haven't watched the video on the 7 institutional reference points, kindly go down to the videos on the channel and watch that lesson, this video for the 7 institutional reference points. You're going to have proper understanding on how to apply, how to understand them, and how to apply all of this. So you can see price created a bearish order block with a fair value, traded back into that level. This looks to me like the start of that bearish order flow that we're anticipating to see. This is supposed to engineer a retracement sell on the weekly and the monthly time frame. Okay, so what I'm looking to see here is that I would like to see this guy trade below this the previous higher low. Okay, once it does this and the body of the candle closes below this, then that will be a new shift of market structure lower. Then we'd like to see retracement into that bearish breaker now, or the fair value gap that will be created in the process before we drop into the weekly level that we have outlined here. Okay, while I'm looking at this, I'm also paying attention to this level as a deeper retracement. So price may take the sell side liquidity pool here, sit on the bullish order block, or even trade into that level right here before we continue with the buy on the dollar. Okay, so the current daily institutional order flow, as you can see, is bearish. The weekly ended as a rejection candle. All right, and the monthly has traded into, has tapped into that sell side imbalance, buy side inefficiency, and has created a bullish breaker below. So we're anticipating that it's going to trade into that bullish breaker on the monthly, trade into that sell side, that internal range fair value gap on the weekly, and time frame. You can see structure should form how this guy is going to drop into that level. Okay, so this is my bias for the dollar. So this is the GBPUSD. This is the daily chart. All right, since we're anticipating that the dollar is going to start dropping, we should also likely see the pound dollar also start to trade higher into a higher level for the bullish retracement on the weekly time frame. So you can see that the GBPUSD on daily time frame has traded into a bullish breaker on the daily time frame. You can see that breaker, price took out the low here, then gave you a shift of market structure here. All right, that's a bullish breaker. Price has returned into that bullish breaker and has formed a swing at a significant level. Remember, swing highs and lows are only important when they are formed at a higher time frame significance reference point or key level. Okay, so right now you can see it formed a lower low, price created, took out the sell side liquidity pool resetting below that low. Then right now price has formed a swing low as well, 3 candle price action where the middle candle has the lowest low, as you can see there. Okay, thereby creating also a bullish order block with a fair value gap. All right, that bullish order block with a fair value, price traded back into that fair value gap. Okay, tapped into that fair value gap and is pressing for higher levels. We like to see it close above that old high. Okay, that will be a shift of market structure on the daily. Once price returns into the bullish breaker or the fair value gaps that will be created around that level, we'll buy the GBPUSD, we'll buy it into these levels, the buy side liquidity pool residing above that, and the weekly fair value gap that we have outlined right here. Okay guys, so this is my anticipation for the dollar and GBPUSD. Make sure you like the video, comment in the comment section, let me know how you feel about these lessons. Also, don't forget to join my free Telegram community using the link in the description of the video. And if you are looking to get started with a proprietary firm, you can also register with the link on the description of the video, and once you use the coupon in the description of the video, you can get up to 20% discount when you register with the link and the coupon in the description of the video. Guys, until next time, I wish you good luck, good trading, stay safe.